In this video, I'm going to talk about trading false breakouts. Stay tuned. Hey traders, a very warm welcome to you. So this strategy is definitely one of my favorite trading strategies. It must be up there with all the great trading strategies, and one that I use regularly to this day and have done for many years. I love this kind of stuff. Let's look at it, let's explain why it works, and let's set some rules down for it. So, a false breakout, let's imagine we are kind of sitting in a range here. And of course, I'm simplifying this for the board. In a real world, it's not going to be exactly a sine wave like this, but let's just have a look at it as it is for now. We get this scenario. So we kind of sit in a range and we start to push up, right? The market will push through two highs. And this range shouldn't be going on for too long, because the longer the range, the more likely it's not going to be a false breakout. But maybe we've had three kind of pushes to the highs here over a period of a week, or if we're an intraday chart, maybe that's kind of a couple of days or whatever. We now push to high, or even we could be on a 15-minute chart, and that's like a 4-hour window or something. It doesn't really matter. The point is, we've now got a breakout here, and everybody is piling in to that breakout. They're looking for that and they're saying, yep, you know what, I'm going in, it's a breakout. They're going long, they're just going long, and they're obviously going to put their stop kind of under here, or maybe some will put it under that low end of the range there. Let's put a support level here as well for this range. Okay, so lots of people are going to go long. The textbook strategy says go long, and often that will be the case. That will push on and on. I tend to think that we need to see what's happened before that. If that's been going on for a long time, then yes, that's more likely to break. If we're in maybe we're in a downtrend, and this is actually something I was going to lead to the end, but let's mention it now. We'll have some more stuff at the end. If we're in a downtrend and we have this scenario where we've come down and we've flagged, and people are still buying this breakout, this is even more powerful. It's like adding that layers of edge we've talked about before. If you're a subscriber, you'll know about that kind of stuff. But forget about that for now. If we're in this situation where we get a breakout to the upside, everyone piles in long, what do you think happens? If it goes up, they're happy. If it doesn't go up and it starts to roll down, we're going to get some very weak guys are going to be selling as it comes back through that range. We're also going to be getting, don't forget, we sort of package this as trading against trapped traders, right? Which is fine, and I get it, and I know that that's really the premise of it, but there's another layer of that as well. Because not only do we have the guys who are trapped long, and traps may be a bit extreme, but in other words, they have to come out because that's the premise of the trade, and it's broken, they're going to take a breakout, hasn't broken out, they're going to come out, they're going to have a stop there, they're also going to have a stop there, some of the guys who are giving it a bit more room. But we also have the situation where if there's sellers waiting for this, if you're a seller and you're waiting for this, you want the highest possible price, right? You've been trading this, maybe you've sold a bit here, sold a bit here. Not many sellers will have sold down here, which is why we're having a continuation to the downside. It comes up here, it pops up. You see that maybe you've sold quite a lot because it's quite good value for you, because you just, as a seller, you think it's good value. It starts to push lower. It just exaggerates people's behavior. As sellers, you might think, well, that's still really good. Let me, activate my selling algorithm that's going to sell, and now my average price is going to be kind of decent instead of being down here. And so it just exaggerates the move from every participant. These guys are trapped. They're selling their long position. It pushes lower. Very often you're going to get this is quick. This move down is quick, and the quicker the better. And then this is like a knife through butter. Generally, this kind of what has been a pretty decent support level tends to not hold. It tends to just go straight through, push through, and maybe has a little effort before just completely dying and capitulating to the downside. And that is, again, because there may be obviously some buyers still resting there from before, but because you've got a lot of now buyers who were buying here, they were buying, who actually are all bullish generally on this stock or this market, have bought here instead of here. Now they have become sellers at that point instead of buyers, which is adding fuel to the fire to the downside. So we get the fake out, the breakthrough, and ultimately the break to the downside. Now I've added an extra layer onto this, which is maybe unnecessary. This is what I call a kind of a range fake break, where we're in a range and we fake the upside and break back to the downside. And within the premise of a downtrend, that works very, very well. We don't necessarily have to that. I've added that unnecessarily really, is that we could be in any kind of scenario, but the fake out is still the same, where people have come in long and it's caught them out and then maybe downtrended away. So it matters. It doesn't really matter where we put this. And if we get rid of this so we can avoid confusion, guys, that range fake break is a great trade, by the way, great trading setup. But we could have kind of been, you know, in this scenario where we've pushed up and we've been in an uptrend and it's been all very nice and people have assumed that we're going to continue, but it doesn't. It catches people out and then very quickly rejects. It's the same kind of thing. So we either trade that. How do we trade that? We either trade that by waiting for it to come back under the resistance level, which is probably a nice way of quantifying it because we can put our stop here, or, you know, we can wait for it to push back through, reject completely, and then kind of pull back a little bit and take it to downside. We've got some options. The point is, keep an eye out for these false breakouts, guys, because, you know, very often they yield nice, profitable trades, especially when we put it in the context of what's happened, you know, multiple weeks ago, days ago, whatever time frame we're on. Where are we in the position? Are we at the bottom of the range? Are we at the top of the range? Are we in uptrend? Are we downtrend? How is it faking out? How is it doing it? And adding that to say, yes, well, actually, I do want to fade it, can be quite profitable. And it can get profit quite quickly as well, because of the nature of everybody diving out of the same kind of position that they were stuck in. All right, guys, thumbs up if you like this kind of stuff. See you in the next one. Take care. Bye-bye.